Japan is a staunch ally of the US. They do whatever they're told. And if a weak dollar is necessary so that, you know, the US can reindustrialize, Japan is the largest holder of treasury debt. It's not China, it's Japan. So, and the yen is weak. They keep it weak. The BOJ has been printing money for 30 years to solve their balance sheet recession that started in 1989. So at the end of the day, the world has financed itself with cheap yen. You know, yen went to 140 or below 140 yesterday. When the yen strengthens, people have to unwind these assets. They have to sell stuff. They have to sell bonds specifically. And so if we get a chaotic Japan unwind because Trump wants a weaker dollar, so the yen has to strengthen. Well, if the yen is strengthening and the BOJ is raising rates, then if I'm a Japanese person who's borrowed yen to buy stocks or bonds or whatever, I have to sell it and cover immediately because I'm about to lose money. Or if I'm a Japanese person, now I can buy a Japanese government bond and it yields enough so that I don't have to take that FX risk and go into treasuries. And so this is the unwind of Japan Inc.'s massive carry trade position as a country is probably the biggest risk to the biggest catalyst to the resumption of QE and explicit yield curve control. Because if Japan is going to repatriate the trillions of dollars of capital, most specifically in the United States, then they're going to have some accommodation from the Fed and the Treasury to make sure they don't blow up the U.S. financial system.
Yeah, that's what seems so confusing is that, I don't think it's a coincidence that the first place Scott Bessent is going to negotiate on trade is Japan. And to your point, yen at 140, and if they're talking about wanting a weaker dollar, that almost certainly means a stronger yen. But if they have a stronger yen, that can, if we lose at 140 level, for example, like that's going to have some pretty significant impacts on yields. So do you think they're thinking about this in terms of, okay, if we get some sort of currency agreement where we strengthen the yen, there needs to be that other side of the impulse, which covers the yield side of things, or else this thing just all blows up?
Absolutely. And they already have the tools, right? There's central bank swaps. The Fed can essentially print infinite amounts of money, hand it to the BOJ, and the BOJ can basically take these bonds off the private sector and warehouse them. And then the Fed will just continue to roll the loan. They've done it before during the 2008 financial crisis. They don't like to talk about it, but that's why all these things were created. And so I would imagine like that's the simplest way for them to do it. And again, it's not considered quantitative easing per se, because it's not the technical definition of it, how the general layperson understands it. And so people would be oblivious to exactly why is the market going up? Why is my coffee, why is a coconut water $20 now? I thought they weren't printing money. No, they are printing money. It's just in a way that you don't understand.